Hi folks, so we're going to move on to our final topic, which is looking at international issues, international businesses, multinational companies and exchange rates, which is what we're going to start with today. It is quite a tricky topic, so you might want to refer back to the textbook, watch some more YouTube videos, try and get your head around the effect that a change in the exchange rate might have on a business. Okay, it is quite a tricky topic, so you might want to watch this video a few times, pause this video. Obviously, if you're still struggling, drop me an email, drop a comment, and we can have a video conference. Okay, so first thing I want you to do today, 3 questions. What is an exchange rate? That's the main thing we're looking at today, exchange rates and their effect on business. What is the current exchange rate for a Great British Pound, so sterling to Hong Kong dollar, and what is the trend of that? Has that been static? Has the exchange rate been static between these two currencies? Does it vary a lot? What kind of pattern can you observe over the last year, 5 years, 10 years? Have a look around. You'll find this data really easily in Google. Okay, so pause the video and find out this information. What is an exchange rate? Probably you already know. And what is the current exchange rate from pounds to Hong Kong dollars, and what is the trend between these two currencies? Okay? Okay, so what we're looking at today, well, we want to be able to explain what an exchange rate is, obviously, and how they affect businesses, and how an appreciating or rising exchange rate can affect businesses, whether they import, whether they export, and whether a depreciating currency, how that might affect businesses in terms of their imports and exports. Okay, any business that trades internationally is going to be profoundly affected by the exchange rates. So hopefully you should have found this out. An exchange rate is the value of one currency in terms of another. Okay, so that could be Chinese yuan to Hong Kong dollar, that could be Hong Kong dollar to US dollar, that could be pound to euro. It's just the exchange rate of one currency in terms of another currency. Okay, so today, £1 sterling would be equivalent of $10.11 if Hong Kong dollars. Okay, so it's the value of one currency in terms of another. So let's have a look at the trend of Hong Kong dollar to pound. Okay, so you can see I found this information. We've got the last 5 years, and you can see that it's quite variable, isn't it? It changes frequently, and that's based on the powers of supply and demand. If you're an economics student, you probably already know about that most exchange rates are floating, which means the value of the exchange rate is determined by the demand and the supply of that exchange rate. For GCSE business, we don't need to know where the value comes from, but we do need to know that they vary quite frequently. Okay? So let's get straight into some scenarios then. So I'll pause the video several times and you can have a think about this. So let's just take a really simplified example. Let's assume all Nike trainers are produced in China. Okay, maybe they are, maybe they aren't. I think they produce in Vietnam as well. But let's just, for simplicity's sake, let's just say all Nike's trainers are made in China. Obviously, they're then exported from China around the world. Okay, so if there is a sudden increase in the value of the Chinese yuan, what effect would that have on the demand, or the sales rather, of Nike trainers? Okay, so the Chinese yuan suddenly becomes much more valuable. It takes a lot more of foreign currencies to buy those yuans. What effect is that going to have on Nike? Okay, just pause for 20 seconds, have a little think, and then I'll explain what the effect is. Okay, so the trainers are going to appear more expensive. Okay, the price hasn't changed. That's really important. The price hasn't changed. It's the currency, the value of the currency that's changed. But the trainers will appear more expensive to the rest of the world because it's going to take more pounds, more euros, more Hong Kong dollars, more US dollars in order to buy the Chinese yuan that's now more valuable in order to buy those trainers. Okay, so therefore, this is going to be bad for Nike because they're going to see a decrease in sales because their shoes are effectively more expensive to foreign customers. Okay, let's have another example. So let's say we've got a British car producer that's producing cars in British factories and then selling them around the world. They are exporting them around the world. Okay, so they sell their cars internationally, and now there is a sudden decrease, a depreciation pound. So the pound got weaker. The pound has been notoriously weak for the last 2 or 3 years since the Brexit vote. So what would be the effect of a weak pound or a depreciated pound? Okay, have a think, 5 seconds, and then we'll share our thinking. Okay, so the cars are going to appear less expensive. So if you're an exporter and you've got a weak domestic currency, that is going to be good because you're charging the same price. They haven't changed their selling price, but because their currency is weaker, it takes less foreign currency to buy pounds. So therefore, the cars appear cheaper to foreign customers. Okay, because the currency, the British pound, is worth less. So if you're an American customer, your US dollar has suddenly become stronger against the weak pound. So you're going to see an increase in sales. So if you're a British producer and you export abroad, you will have been having an increase in sales over the last few years because your goods suddenly appear cheaper to those foreign customers. Okay? So we can then surmise that if we have a depreciation, so a fall in value of the domestic currency, the home currency, businesses that export, like the British car manufacturer we just used as an example, can see an increase in their demand and an increase in their sales and an increase in their revenue. Okay, we don't know about the profit because we don't know what effect that's having on their costs, but we can definitely make the assumption that revenues would increase. Okay, because domestic goods appear cheaper to foreigners, so demand would increase. Okay, if you recognize that diagram, great. If you don't worry about it. It's just a supply and demand diagram, just illustrating the cheaper something is, we go from point A to point B, the more we sell. Okay, so it's not that the price has changed. The domestic business, the home country business, is still charging the same price. It's that their currency is cheaper, making that price seem lower to foreigners. Okay, next one. Depreciation then. So what if you are an importer and your domestic currency depreciates? So let's imagine you are that car producer, but you're importing all your raw materials from foreign countries. Okay, this is going to be really challenging for you. So if you're importing from China, you're importing from America, and then trying to sell those goods in the UK, let's say, then in effect, those products have become more expensive because it's going to take more pounds to buy the foreign currency that you need to buy those imports. You need to buy those foreign goods. So if you're a British car manufacturer buying steel from China, and the British pound goes down, it's going to take more pounds to buy those Chinese yuans, to buy the steel to make your cars. So your costs have risen, and therefore you're either going to have lower profit margins because your costs have gone up, or you might have to raise your prices in order to cover the increase in costs caused by the weak currency. And a lot of firms in the UK have been struggling with this increase since the depreciation of the pound, since the results of the Brexit vote. So foreign raw materials become more expensive, and this increases the firm's costs. Okay? So maybe just take a pause, have a think about those two effects just for a moment. I know there's a lot of information, but maybe just take a pause, make some notes on the effects of depreciation, and then we'll talk about appreciation. Okay, so what if we have an appreciating currency? So a strong currency that is increasing in value compared to other currencies. Well, businesses that rely on exports are really going to struggle because their goods suddenly appear more expensive. Again, I keep saying it, but the price hasn't changed. Okay, so let's say, use the UK again. The UK firms have not changed their prices, but because the currency has become stronger, it's going to take more foreign currency to buy the same amount of goods. So therefore, these British goods suddenly seem more expensive to foreigners, and we know when something's more expensive, people buy less of it. Okay, so if you're an exporter and you've got a very strong appreciating currency, that is going to be bad for your sales as a business. Because as I've said, the goods will appear more expensive to foreigners. So they might have to drop prices to stay competitive, or they might have to, they're going to have to drop prices basically to try and counteract the strong currency. Okay. So what if you have an appreciation and you're an importer? Well, if you have an appreciation and you're an importer, great times, because effectively your costs have fallen. So if you're a British car manufacturer again and you're importing steel from China and the British pound increases in value, then that steel suddenly becomes cheaper or relatively cheaper because of the strength of your currency. So this is going to lower your costs. So if you're importing finished goods from China or India or Thailand, you're importing goods and then selling them in the UK, then those goods suddenly appear cheaper to you. It takes less British pounds in order to import those goods because your currency is stronger. Okay, so you could enjoy higher profit margins because your costs have fallen, or you could even drop prices to try and see an increase in demand. Okay, so I realize that that's a lot of information, that's a lot of nuances and detail in there. So what I want you to do now is this worksheet here. Okay, so we've got some information. So Santa Cruz bikes are an American bike producer. They're very popular with Hong Kong mountain bike riders. The frames are produced in Santa Cruz, California, but use Shimano components which are imported from Japan. And then I want you to use these values. So $1 is equal to 7.76 Hong Kong dollars, and 1 Japanese yen is worth 0.01 US dollars. Okay, and there are some questions here. Look at the marks on offer, gives you an indication of the level of detail that should hopefully work through and illustrate what I've just been talking about in that video. Okay. I will upload an answer sheet as well, but please try and do this without just referring to the answer sheet. Otherwise, you're making no progress and making no learnings going on if you're just copying and pasting from the answer sheet. Okay, so have a go and then check your work and self-assess your answers against the answer sheet that I will upload as well. Okay, this is a challenging topic. If you have any problems, please drop me an email or drop a comment on this post, and we can try and get this sorted out. It is an important topic. Don't just write it off. It is questioned quite a lot. It is a fundamental business studies topic because exchange rates are such a prevalent and important part of business. Okay, so watch this video, have a go at this worksheet, self-assess, make sure that you can do all of this. Okay, hopefully that video is not too long, and I shall speak to you later. Okay, thank you.